Like it's going to be pushing downward as we settle a little bit here. S&P off too, but no indice is doing as badly today as the Dow Jones. We're going to be talking about individual stock, but not a good way to end the trading.
No, it's been a tough couple of sessions with all of this, I want to say nonsense going on in Washington. Obviously, I'm referring to the fiscal cliff.
Nonsense.
We will get to that in detail where we stand here on this Christmas Eve. In the meantime, let's zero in on the semiconductor names. They were among the worst performers today, with the semi-ETF, SMH, seeing a move to the downside. The top holdings of the ETF include Intel, Texas Instruments, and ARM Holdings.
And let's look at energy. It was not a good day for energy either. Red on the screen for the whole energy sector. Names like Chevron, Hess, and Marathon, they all posted losses today.
And the retail sales news, not so encouraging this year, and the retailers themselves were not all in on the holiday spirit, if you will, on this Christmas Eve trading day. Look at the red arrows. American Eagle, Staples, Sears, Guess were among the biggest losers in the sector.
All right, well, as Lori was mentioning, those idiots inside the Beltway can't seem to figure things out. No fiscal deal in Washington, and guess what? Don't expect one anytime soon. Lawmakers are gone for the holidays. So does the White House even want a deal by the new year, or are automatic tax hikes what they want in order to balance their spending? More on that coming up. Does the president really want to go over the fiscal
I think
cliff?
you hit the nail on the head, David. Can't wait to listen to your interview this hour on where we stand with the latest negotiation or any at all on the cliff. Plus, spending specifically on toys. There is not a runaway must-have toy this year, but there are some hits and a few misses as well. Find out what will be under most folks' trees or what will be stuck, left over on the retail shelves.
I want to know what Lori's kids want this Christmas. But first, we're going to tell you what drove the markets today with today's data download. Continued gridlock inside the Beltway, sending stocks lower on this shortened day of trading. All three major indices closing in the red, with the Dow posting the biggest losses. Energy and utilities led the declines, while materials and consumer discretionary outperformed. And natural gas, the big mover in the energy pits today, falling more than 2%. Despite colder weather in much of the country this week, forecasters are expecting milder temperatures in January, and that might have hurt natural gas a little bit. Also, lots of action in the currency pits. The Japanese yen falling to a 20-month low against the dollar. The move comes on the back of comments from the country's incoming prime minister, who says he will consider changing the law governing central banks, getting more politically involved. That spooked the markets. Lori?
Let's get our guest take. We've got Larry Shover in the pits of the CME. Gary Rand tells us why the pessimism on the fiscal cliff is making him bullish, believe it or not. And Mark Martiak says it is time to get defensive. Larry, we'll begin with you. What are your thoughts on the cliff? How do you see this all sorting out at the end of the day? A big deal, a little deal, a medium deal, no deal at all, to David's point? What's the outcome?
You know, I think the odds are pointing to a mini deal. I mean, I don't want to overstate the obvious. Expectations for a big deal are fading, and they're fading quickly. And you can see it behind me. The S&Ps are on their lows. It looks like it's going to be a mini deal where the Bush tax extension will be helping the people making below $250,000 a year. It will not address sequestering. It will not address the debt ceiling or spending or anything like that. It'll be a patchwork of things. It will make the market very, very nervous. But given it's Christmas Eve right now, people are a little bit negative, but most people are Christmas shopping, so not too worried. But it looks like it's going to be a mini deal.
Well, Larry, around this time, every year around this time, the IRS issues its formal withholding guidance for the coming year. What are they putting in that thing right now?
It's going to be a bigger document than we're used to, because they're going to be giving guidance that they're not sure how to even give guidance right now, because they don't know what's going to happen. But what I've been told by traders, by people that are working in that industry, is that they're going to give guidelines assuming that some sort of mini deal will get done. So if this happens, then this is how you shall proceed. It's going to be an amazing train wreck.
Larry, look ahead into 2013. You mentioned the debt ceiling. What happens if we borrow past the debt ceiling? How at risk is our country of another ratings downgrade, and what will the ramifications be?
Yeah, you know, we're going to be running out of funding even this week, and that sounds bad, and it is bad, but they do have ways to patch this together with shoestring and bubble gum that perhaps can get us through February. But yeah, another ratings downgrade or even a warning of a downgrade won't be well taken by the markets. But let's keep in mind, the markets are pricing that in right now. So maybe they're thinking that That's not going to happen right now, and that a patchwork model will be put in place, and we won't even need to worry about a warning from Moody's or the other ratings agencies.
Larry, thank you for now, but stick with us. We're going to check back in with you when the S&P futures close for the session.
All right, let's bring in our markets panel now. We have Gary Rand. He's the founder and chairman of Telemus Capital Partners. And Mark Martiak is the senior wealth strategist with Premier Wealth First Allied Securities. Gentlemen, good to see you. Mark, you think we're going to go over the fiscal cliff. I happen to agree with you, or at least I think that some people actually want that to happen. But you have to advise your clients in a certain way. If you believe that we're going off the fiscal cliff, what do you tell your investment clients to do?
Well, currently, what I'm advising my clients is to accelerate their income right now and defer deductions based on strategies that we're having, discussions we're having with my clients and their accountants. I'm also telling them to be very defensive. Our baseline scenario as we head into the new year is for slow but steady growth, coupled with low inflation and reasonable and attractive valuations of equities.
Now, Gary, let me get you to respond to that outlook, because I understand you're more positive on the market because of the cliff.
Well, I think, everyone seems to be mesmerized by the discussion about the fiscal cliff, but the last time I checked, stock prices were usually based on earnings outlooks in the economy, and we see both improving. But that's the issue.
Everyone's ignoring the fundamentals right now.
Yeah, exactly.
When can we get back to the fundamentals and ignore politics? If ever a time in the future.
Well, maybe when we start talking about the Super Bowl ads versus the fiscal cliff.
I'll tell you.
Yeah.
You make a great point. Carry on.
I think at some point, we'll solve the fiscal cliff. We'll either kick the can down the road, we'll have a grand bargain, we'll have no bargain, but it'll be old news, not the current news.
Mark, we're going to be talking about the retail sector coming up in more detail, but we're getting a lot of mixed signals about what's happening in retail in this holiday season. What are you sensing about it?
I think the retail sector will perform well. I just don't think it will exceed analyst or Wall Street's expectations. I think everything that needed to be done in terms of consumer investments purchasing in the aftermath of Sandy took place. On the other hand, if you notice, there haven't been a lot of promotions out there from the major retailers past the holiday weekend that kicked off this season, that is the Thanksgiving Day weekend. So I believe retail will do reasonably well. The question is, will it exceed last year's performance?
Speaking of retail, Gary, I know Apple is one of the companies you're bullish on, even though shares have come down $90 of late. Where's the upside? Where do you see this trajectory?
Well, I have 3 sons, all in their 20s, and they're married to the Apple ecosystem for, I think, years to come. And, I think Apple's a play that it's not going to be the Sony that people talk about. I think Apple's got a place in the public's mind that's going to be tough to remove.
So with the recent declines, is this an entry point around $5.20 a share?
I think if you back out the cash, the stock's trading, 8 or 9 times earnings, depending on who you're looking at. Then I think, given its outlook and I think the demand for not just the U.S. consumer, but, now you talk about phone sales in China, for example, just started on the I-5. I think there's a lot of catalysts, and I think the stock's cheap.
And Mark, despite your pessimism about what might happen in the economy, you're optimistic about what's happening with home builders. You think this is a real burst that we're seeing here, one that'll last?
I agree. The trend line points to home builders enjoying a nice ride, and you're seeing that it was priced into the market probably about 2 quarters ago, but it will continue. And I think that that part of our economy will help not only the home builders themselves, but investors that are in the market.
By the way, continued for how long, Mark?
My sense is throughout 2013. I really think that you can really count on this resurgence from the home building sector.
All right, one last comment from you, Gary. Mark, sorry I didn't get to ask you any direct questions, just the way it all sort of unfolded this hour. But Gary, remaining time here, what's your preferred asset allocation?
Right now, we're allocating, so a model balanced portfolio at Telemus would be about 43% equities. That would be split equally between domestic and foreign. We're about 15% traditional bonds. We're about 30% non-traditional bonds. We like credits like junk and mortgage REITs. and we're about 10% real assets. That would be energy, MLPs, precious metals, and we're about 2% cash.
Great detail. Thank you, gentlemen.
Mark Martiak and Gary Rand, thanks to both of you. Appreciate you coming in.
Thank you for having us. Happy holidays.
Likewise, back at you.
Same
It
to you.
is Christmas Eve day, all through the House. Not a lawmaker could be heard. We are just days away from tax hikes for all of us. And where are our lawmakers? The ones we pay with those tax dollars? They're away for the holidays. So where do we stand now? Up next, it's off to D.C. for the very latest.
And later in the hour, a look at why we might not have a deal anytime soon and who that could actually benefit. Keep it right here on Fox Business.
Want to know what I did in the last 5 hours? I played a round of golf. And then I read a book while teaching myself how to play guitar. Ran 10 miles while knitting myself a sweater. Jumped out of a plane. Finally, I became a ping pong master while recording my debut album. How, you ask? With 5-hour energy. I get hours of energy now, no crash later. Wait to see the next 5 hours.
You can go anywhere in the world.
And everyone knows the American dream.
Headed for the open door.
You can come from a small town or a big city. It doesn't matter what you've been dealt.
True talent always overcomes.
If you've got what it takes, you can make your dream a reality. Dreams come true.
Dreams come true.
Dreams come true here.
They were the top stories impacting your bottom line, and only one network brought them to you at the speed of business. Fox Business, the market movers and shakers.
Facebook is finally a public company.
Deal breakers.
Here's the straight answer. Tax changes.
Game changers.
Is this the end for unions?
Investors are taking Speaker Boehner's words to heart.
Headline makers.
Sandy has hit Atlantic City.
With insight and analysis that gives you the edge.
We've got to come to our senses.
More people turn to Fox Business Network, giving you the power to prosper.
Dow closed down about 50 points, largely due to frustrations from Washington. Shares of daily deal site Groupon are falling today and in focus. Let's head back to Nicole at the floor of the New York Stock Exchange for more. Nick?
Hey, all right. Well, we're taking a look here at Groupon, Lori, as it's down about 4% today. So under pressure, and this is after they made an acquisition. So you see at a $4.63 a share. They've acquired Commerce Interface. This is a company with which they've been working since 2012, since the middle of 2012, April of 2012, in order to streamline some of the operations. It's technology management. It's a way that they can work with some of their thousands of existing vendors. It supposedly will help them and better support some of the merchants overseas going forward, and now really gives them exclusivity with this particular company. But this acquisition here today puts them under pressure about 4%, and so that's why you're seeing it down about 19 cents. Merry Christmas, everybody.
Yeah, on that note, thank you.
You know, I allowed one of my Groupon things to expire. I had a free dinner somewhere, and they give you the amount of money that you actually paid for it, so it's not a total loss.
That's the problem with the stock, is it's not front and center in people's priority list.
It has some issues. It has some issues.
Summed it up, David.
Well, S&P futures are closing right now. Let's go back to Larry Shover at the CME to see how things might work out during the Christmas time. What do you think, Larry?
range between 1,400 and 1,430. 1,430 used to be the support. Now it's the resistance. 1,400 now is the very key support. But what's important for us all to remember, forget about the fiscal cliff for a minute. What's driving the stock market? What's keeping us where we are right now? I think a lot of it is consumer discretionary spending. Not because of Christmas, but because gasoline prices have dropped 17% since September. And also, there's a profound amount of mortgage refinancing, people taking advantage of all-time low rates. That's giving us a push. That's holding the market up right now, and I think a lot of people are not talking about that right now.
Do you think, Larry, that that's enough, that those tailwinds, if you will, are sturdy enough to prevent the S&P futures from hitting that 1,400 level support here in the next couple of weeks? Because there are many people would argue, more headwinds than tailwinds right now.
Yeah, you're exactly right. And, we're an angry mule's kick away from 1,400. It wouldn't take much at all. A slip of the tongue, we're at 1,400. I'm just saying more that people are just perplexed. Like, why is the market holding up like it is with all this bad stuff around us? And I think it's because consumer discretionary spending has helped giving us that tailwind. But, Lori, you're exactly right. One bad word from Congress or the Senate, and we could be below 1,400 in a heartbeat.
Well, we'll keep our eyes on that level, Larry. Great to have you. Merry Christmas, of course,
Thank you.
Teetering on the edge of the cliff, both the fiscal cliff and the consumer cliff. Well, speaking of the fiscal cliff, talks on hold until after Christmas. And President Obama and House Speaker Boehner haven't spoken since Friday.
So with time running out, is there any hope left for a deal? Peter Barnes is in Washington with the latest. Are you the last man there, Peter?
Yeah, Lori, well, staff is here, okay? There's staff working on this, but all eyes are on the Senate when it returns this Thursday to try to get a deal to avoid going off the cliff. This past Friday, before the president left for Hawaii for the holiday, he proposed a limited measure to avoid all of the cliff when Speaker Boehner's Plan B got scuttled. The president wants to extend the Bush tax cuts for the middle class and avoid some of these deep spending cuts. A White House spokesperson says, quote, staff discussions continue between the administration and Capitol Hill. In July, you may recall, Senate Democrats passed an extension of the middle class tax cuts for the year. Those folks making less than $250,000 a year at a cost of $157 billion. That bill would also patch the alternative minimum tax for 2012 for $92 billion. Now, Senate Republican leader Mitch McConnell is critical to hammering out a deal in the Senate because he can filibuster any legislation. But his spokesman told me this morning, quote, nothing new to report. We don't know yet what Senator Reid